Hello and welcome to this weekend's market update. Today is 13th of May 2023. So this week S&P 500 finished with a small loss. It lost 12 points to close at 41.24. And not much has changed in terms of price action this week. You can clearly see that it still remains stuck in this range, 3,800 on the downside and 4,200 on the upside. Now, since making this big move from 3,800 to 4,200, you can see that it's basically consolidating underneath this level. Overall, the price action remains range bound. Momentum indicators are positive. You can see that RSI is above the 50 level, MACD remains above the 0 level. So I would say that the overall technical picture on a weekly basis is positive. Now, if we look at a smaller time frame just to learn what's been happening. So this is a 2-hour chart. You can see that over the last 6 weeks, S&P 500 is basically stuck in a big range, these two range. So the top of the range is around 41.85 and the bottom of the range is around 40.50. So it's been stuck in this range. And even within this range, it's now established a smaller range right here, which is just a 50-point range. The lower end of this range is 4100, the upper end is 4150. On Friday, it came to the lower end of this range, and then towards the end, we saw this bounce. So overall, we're stuck in this range. And then this is happening because there is a conflicting narrative in the market. So there is a group of investors who believe that we're going to have a soft landing. So they point to falling inflation rate. CPI now has a 4 handle. And as a result of declining inflation, they feel that the Federal Reserve is close to pausing. In fact, it is entirely possible that Federal Reserve may not raise interest rate at the next FOMC meeting, judging by the probability. So if you look at the probability right now, the market, there is an 85% probability that the Federal Reserve will leave interest rate unchanged when they meet next on 14th of June. Now, obviously, this probability changes as more data comes in. But as of now, there is an 85% probability that the Federal Reserve will leave interest rates unchanged. And usually Federal Reserve doesn't do anything against the market. Coming back to this, so, the soft landing, group that believes in soft landing, they also point to the fact that labor market is strong. And when labor market is strong, it's unlikely we're going to have a major recession. Q1 earnings have been above expectation. And going forward, Q3, Q4 earnings estimates look better. Also, they point out to the fact that bearish sentiment is very strong at the moment. If we look at the sentiment indicators right here, so this is the AAII survey. The latest reading shows that the bullish sentiment is at 29.4%, bearish at 41.2%. The bearish sentiment is still way above the bullish sentiment, even though we saw an uptick in bullish sentiment, but it still remains, the bullish sentiment remains well below the bearish sentiment. And usually, the sentiment acts as a contrarian. Like people who are bearish, they usually structure the portfolio accordingly, meaning they're either, sold enough stocks and moved money to cash, or they're in defensive sectors like staples and utilities. So if that's the case, then that acts as a support in the market. So that's basically what people who believe in soft landing, that's their macro narrative argument. On the bearish side, people point to the fact that those who are bearish, they believe in hard landing. They say, look at the regional banks. Many of them have failed. Chances are more will fail in coming months. Even if they don't fail, they're likely to tighten credit standards. which means they're going to lend less, and that's going to lead to a credit crunch. And if we have a credit crunch, odds of a hard landing recession increases. They also point to the fact that the debt ceiling issue could cause a potential problem in the market. So because of these conflicting narratives in the market, neither side is in control. As a result, we are seeing this kind of a sideways market action in S&P 500, and it's not clear how this is going to be resolved. But only when we have a resolution to this sideways action, either to the upside or to the downside, that's when the big opportunities will come. But at the moment, because it's trading in a range, you have to be very quick. Now, even if we look at this small structure right here, one way to play would be if it breaks the top end of this smaller range, then you target the top end of the big range. So on a break above 4150, you target 4185. On the other hand, if it breaks 4100, you target 4050. So you can play that way until a eventual break of this bigger range happens. Until that time, you can just be quick and take advantages of these smaller ranges. Now, if we look at other markets like NASDAQ, so here's NASDAQ. Now, NASDAQ chart looks way more constructive than S&P 500. You can clearly see that we have a series of higher lows in NASDAQ. It has broken out of this range, and it's now consolidating above this range. On Friday, it came and retested this breakout level and held. So let's see whether or not NASDAQ can consolidate and make further move to the upside. Now, if NASDAQ were to rally further, what could be the upside level? So if we look at the daily chart, let's see, if we crunch it up, the next upside target would be the August high, which is around 13,700. So that would be the upside level on NASDAQ. But definitely NASDAQ chart is much more constructive than S&P 500. If we look at Dow and Russell 2000 next, Dow and Russell 2000 are the weakest. So if we look at the daily chart of, you can clearly see that Dow is kind of consolidating in this range. You can see that since forming this high, it made a higher high, but then it made a lower high. So you might say this is a probably building out an inverse head and shoulder pattern. So this would be the support. If this level is breached, then it exposes the bottom, these lows from mid-March. Momentum indicators are weak. You can see that RSI is below the 50 level. MACD is moving lower, about to cross below the zero line. So that would not be positive. So that looks more negative than positive to me. And then if you look at Russell 2000, which is the small cap, the small caps are also basically not doing much. The question is whether this ends up being a double bottom, or whether this or whether this is a bear flag consolidation. Whether on a weekly basis this turns out to be a bear flag and then we break to the downside. So it's not clear. We'll have to wait and see. But overall, price action is weak. Momentum indicators are weak. Now, let's have a look at the sectors and see what the sectors are telling us. S&P 500 sectors, that is. So I've grouped them into two primary groups. So this is one group which is made up of technology, communication, and staples. Together, they make up 42% of the S&P 500. These are the groups that are showing positive price action and positive momentum and putting upside pressure on S&P 500. On the other hand, we've got these other sectors where the price action is negative to neutral, with negative to neutral momentum. Together they make up 44% of S&P 500, and they've been a drag. And as a result of these offsetting sector dynamics, S&P 500 is basically going nowhere. So let's have a look at the charts of the sectors and have a look at them in detail. So I'm going to look at them on a weekly basis, starting with XLK. So this is XLK. You can clearly see that XLK, has a series of higher lows. It's now consolidating under the August high, and momentum indicators are positive. RSI above the 50 level, MACD is above the zero line. So clearly this is looking positive, and it's now consolidating. And you would think that maybe it breaks through this level. So this is basically the largest sector in S&P 500, and this is basically holding up S&P 500. Had it not been for performance of XLK, S&P 500 would have been a lot weaker. Then we have communication. So this is also looking quite strong. You can see series of higher lows. It's now consolidating just underneath this resistance level. If it's able to break through this level, then it opens up quite a bit of space. Momentum indicators are positive. So you've got Meta, you've got Netflix, Google. All of those are helping to move communication sector higher. And then you have the staples. So this sector is also performing well. You've got Procter and Gamble, Coke, Pepsi. They're showing quite a bit of momentum, strong price action momentum. So these three sectors together makes up 42%, is pushing S&P 500 higher. And then let's look at these other sectors. I'm going to look at some of the bigger sectors. So let's start off with the financials. XLF. So this is XLF. You can see that once they broke down right here, broke below support right here, and struggling to get back above this level. So the price action is weak. You might say this is a weekly bear flag consolidation. RSI is below the 50 level, MACD is below the zero line. So both the price action, the momentum indicators are weak. This is the third largest group in S&P 500. So this is quite significant. If you look at XLY, which is discretionary, kind of going sideways. I mean, they're not, although there is a higher low, but for the last few weeks, it's basically going sideways. The momentum indicators are in a neutral. Look at RSI, it's kind of hovering near the 50 level. MACD is near the zero line. So this is looking more neutral to me. So this is neither contributing positively nor negatively. So this is also a big sector, discretionary. There is some concern that if we have a recession, investors are going to cut back on non-essential spending. That's where so that's what this discretionary sector is all about, and that's why you see the performance is somewhat lackluster. If you look at industrials, so they're more cyclical, and cyclical stocks tend to underperform the market. You've got Caterpillar, Deere and Company. They make heavy equipments, and during recession, what happens is companies tend to cut back on spending, so they don't buy large equipment that much. So that's why this sector is underperforming. You can see on a weekly basis a lower high. RSI is near the zero line, MACD is moving lower. So this sector is not looking all that strong to me. If you look at energy again, they were strong performers in 2022, but you can see weekly lower highs. Momentum indicators are weak. Even though OPEC made an effort to boost up oil prices by cutting production, but that didn't seem to have any impact on the market. The concern here is that if we have a recession, demand for oil is going to decrease, and therefore this sector is going to suffer. That's energy. Real estate, again, this sector has been, making series of lower highs. Although this is a small sector, but there's some concern that real estate sector could be affected as a result of recession. Also, after COVID, what's been happening is that there's been a change in the way people work. A lot of people now work from home, at least parts of the week. So a lot of commercial real estate are vacant, and as a result, this sector is feeling the effect of that. Utilities is another sector which is not performing that well. So as a result, what's happening is that these sectors which are underperforming S&P 500 and being a drag, and that's why we're not seeing any kind of that's why we're not seeing any kind of directional move S&P 500, because these sectors are holding up S&P 500. These sectors are being a drag, and they're offsetting each other, and as a result we see market which is going sideways. So until we get a resolution of this trading range, trading is going to be much more difficult. You've got to be quick, and you've got to expect smaller targets, because you can clearly see it's not giving us too big of a move one way or the other. Let's have a look at other markets just to see what we see. So let's look at dollar. Something interesting is happening. You can clearly see that after forming a nice base, dollar has now broken out to the upside. So let's just zoom out. Dollar can easily move up to this level. So this level is around 103.9. So that would be the target, having traded in this zone. Strength in dollar basically means that some of the European currencies are going to be underperforming dollars. So here's euro. So having traded in this zone, it has broken to the downside. So the target would be to this level, which is around 1.078. If we look at the rates, bond yields, let's see what's happening in the yields. Not much really, because you can clearly see that 2-year is kind of stuck in this zone, chopping around, no clear direction. 10-year is doing exactly the same. You can see that 10-year is basically stuck in this zone. So we're not seeing any kind of directional bias on 10-year. Even if we look at Fed funds futures, so for example, let's say this is the September futures, it closed at 4.96, which is 25 basis point below the Fed funds rate. Now the bond market is basically pricing in a recessionary risk, and that's why the yields are like 25 basis point lower. I don't think the bond market is expecting a cut in interest rate as long as the economy remains as is. But the market is basically pricing in a modest recessionary risk, and that's why you see the yields are somewhere between 25 basis to 50 basis point lower. So this is the September. This is the October. So the October Fed funds futures yield is at 4.87. So roughly 25 basis point lower, again reflecting a modest recessionary risk. If you go further out, that's when you start to see slight more divergence. So the November Fed funds futures yield is at 4.64, roughly 50 basis point below the Fed funds rate. So there is basically, market is basically saying that there is a higher likelihood of a recession as we go towards the end of the year, and that's basically what the yields are telling us. So overall, I would say the yields are kind of stable. They're likely to change as we get more data that will either push the yields up higher or bring them down. So the yields, overall, I would say fairly stable. What about VIX? VIX is not doing much, pretty much kind of stuck in this zone between 20 on the upside and let's see, around 16 on the downside. It did make an attempt but wasn't able to get back above 20 and stay there. So the volatility remains quite low at the moment. So just to summarize, I would say that trading range continues because we have conflicting narrative between the soft landing and hard landing, and until and unless one group is able to take control of this narrative, I think this trading range continues. When we break out of this range, either to the upside or downside, that's when we're going to have the big moves, because you see, the longer it stays in this range, the more energy is building up, so that when it does eventually break out one way or the other, that's when we're going to see the big move. Until then, we have to be satisfied with small moves. I'm going to leave it at there. Thank you very much for watching the video. Please consider subscribing if you haven't done so already, or you can also follow me on Twitter. I provide update during market trading hours. Otherwise, I'll see you again on a future video. Thank you very much.